Hi everyone, the Lone Wolf here. Welcome back to EVE Talk, your weekly look at the market in EVE Online. And I must say I feel pretty lucky. The server downtime happened while I had to do overtime for work as well. So I didn't really feel any negative impact from the server downtime. But now we are also getting 50,000 free skill points for that server problem. So yeah, pretty much a double win for me. I'm gonna put all of those skill points in the Hecate, so in the Galente Tactical Destroyer skill. I want to get that to 5 as fast as possible and maybe fly a few Hecates around a little bit. But we're here for the market, of course, so let's just dive right in and start off with Plex at 45 seconds. And we can see from the chart that Plex has been doing a pretty steady rise from 800 million since early April, but now it seems to be stalling here right at the top. So 980 million. It doesn't feel like Plex wants to go above a billion just yet, but it might at some point. And I really should sell the ones that I bought at 800 million, make a few hundred in profit, I think, at this point. It looks like it might be over. There could be a sale going on as well that is stopping the ascent here, but almost 200 million profit on the trade that I made there. I think that's pretty good, so I'm gonna take that. Let's take a look at supply demand here. There's really not that much to report. 4, 6, 1, 3. Pretty much the entire front page here. All of these are recent. Oh, that's quite a few of them. But if we go here for the buyers, 967 to 982, so around 15 million in margin in between them, which is around normal. So I would say that it is possible that we're stabilizing at this price here. And then for the new orders, well, here it is starting to slow down around here. We've got, of course, 100 of them being bought here, so you're not seeing big sell numbers like that, except 40 at 990. But it's looking like it's actually going to balance out just below 1 billion. And then, of course, any big move here could put Plex above it, or we could see a summer pullback, which I'm personally hoping for, but I'm not really counting on it. It is possible that we'll stay in this region for a little bit. If the activity can stay a little bit higher than normal during a summer because of the sovereignty changes, I actually think that we could see Plexes stay where they are for the short to medium term. We'll see, of course. Let's take a look at the multiple pilot training certificate then. That one is still climbing up a little bit, breaking 960 million. We're currently looking at 990 million for the sellers. There's not that many of them, and 945 million for the buyers. So 945, and here we're at 967. It is very close. So it does look like after the one-time deal of a lifetime that people could make, where we had a real plunge for multiple pilot training certificates, they're now really back in line with Plex, and I suspect that they're actually going to follow each other very closely. And then the pilot body rescope certificate, that one took a little bit of a dive, so there may have been someone dumping stuff, or doesn't look like it from the numbers here, or maybe again something very similar as what happened in June here for the multiple pilot training certificate. Some sort of sale could have really done a number on the market here for a bit, but it's already on its way back up, so looking like it's going to be quite short-lived. 6-month trend is clearly up as well, so from 140 million we're currently looking at 236 million if you want to buy a body rescope certificate straight off the markets, which is pretty expensive. The margin is a bit better though, 200 for the buyers, 236 for the sellers, but keep in mind this is a smaller market. It's going to be harder to actually get the trades going in this market compared to the Plex market. Moving on to minerals, 4 minutes 15. Let's take a look first at the high-sec ones. Here is titanium. You can clearly see the rebalance of ores happening just before May, and then we have been moving sideways in the around 5.2 ISK, and now we're going back down. So this is actually, I feel that this is quite okay if I go for like the 1 month chart. This is what a sideways movement does look like. The 5-day moving average starts below 20-day moving average and goes above that, and now it's dipping back below, staying right around 5.2 ISK price band. So this looks like it's actually pretty stable. We're down a little bit this week compared to last week, but overall titanium, I think, looks like it's in a stable place at the moment. Let's take a look at pyrite here. That one is going down a little bit. Looks like a bit of more sustained downtrend. If I go for the 1 month chart here again, you can see the 5-day moving average tried to dip above 20-day moving average, but now it's going down, and actually the difference between them is increasing. We're breaking 1075, so be a little bit careful for pyrite. That one could actually try to find a new normal price, quite a bit lower than before. So 1081 for the sellers, 1055 for the buyers. The margin is pretty small, but I guess there is a bit more supply coming in than demand at the moment for pyrite, and thus some pressure on the price. Next up, we've got Mexalon here. That's a bit more in line with what we saw for titanium. You can clearly see a couple of waves here, staying just above 42 ISK. And if I go for the 1 month chart here, below, touching it, going back down, above that, below that, and here we're crossing once again. So it's clear indication that for Mexalon, for instance, this is the current price range, 42 to 43 ISK. And that's where we'll stay for now. Supply demand, I think nothing too much out of the ordinary. Here we've got a few orders, sell orders of 10 million units, and then one bigger one of 68 million units. But here we've got another 7, 55 for the buyers, and then a couple of big buy orders that are supporting the price as well. So this looks like it's quite okay. Mexalon is gonna stay here for the time being. Next up, we've got Isogen. Then that one is a bit more in line with pyrite actually, which is a bit disconcerting. Clearly broke the 100 ISK price band, and now trying to stabilize, but at a lower price. So the sellers are, well, they have to go below 100 ISK. Here they are at 99, 98.99, so just around 99, and the buyers are not willing to go above 94 anymore. So that looks like the new normal, I would say, is you can expect that around 95 to 100, but not above 100, where it managed to stay for quite a while before this. So some of them are going down, a couple of them are showing signs of stability. Next up, Noxium. It's like an in-between one. Sometimes it behaves like a null-sec mineral, sometimes it behaves like a high-sec one. At the moment it's clearly behaving like a high-sec mineral. You had this period of stability as well after the move down, but here at the tail end, just like Isogen, we are going substantially lower, and there is a decent gap that is remaining between the 5-day moving average and the 20-day moving average. So we need something drastic to happen if this is actually going to pull back in like the 520 ISK range. It's not looking like it's going to do that though. We're looking at 486 for the sellers. They've said okay, we have to go lower. 470 for the buyers. That gap may be closing a little bit, and we may be finding this new price at around the 485, 490, something like that, where before, well, you could try to sell Noxium for 520. So high-sec minerals, unfortunately, there is some pressure on that at the moment, and it looks to me like we're actually still trending down. However, it is slowing down, I think, as well. Next up, Zydrine and Megasite, of course. The null-sec minerals here is Zydrine. That one is still trying to go higher. It's really trying to get back to the 1600 ISK price mark. 1579 for the sellers, 1505 for the buyers. So they're trying to delay it, but it's really the sellers that tend to dictate the market for these minerals, because a lot of that has to be imported from outside of high-sec, and it's a bit more of an expensive thing as well. So if you want to make stuff, you tend to come to the market, buy Zydrine, and then you have a plan, so you're coming to the market, you want that right away, so you're buying it straight from the sell orders. There are some opportunistic buy orders, but since people tend to move them in bulk to Jita to sell them, they have the patience, they're gonna put that on the market and wait for their sell orders to actually get filled. So this is really where most of the price is dictated in these null-sec minerals, and Zydrine trying to go a little bit higher, although ever so slowly. And then Megasite actually went down a little bit, so that one is trying to settle at around the 2000 ISK mark, when it actually did touch 2400 before 2 times, but it's not that huge. Well, actually 2000 to 2400 is a pretty big move. So at the moment, let's hope it can actually settle down and maybe go even a little bit lower. But for the last, like since May, we are at a low point. So if you have some money to invest, it could be okay to actually buy up some Megasite, especially if you plan to use it as well. For Zydrine, I'd wait. Maybe at some point this is going to pull back a little bit, closer to 1400, I think is a possibility. But we'll have to wait and see, of course, if these are just the fundamentals of the market finally settling down after the changes. It is possible that you're paying close to 1600 for Zuidrhein, and that's going to be the situation for the rest of the summer. So those were the minerals. Let's take a look at the impact on Tech 1 chips, 1025 for that. And we'll just go over the charts here real quick. Here we've got the Apocalypse, that is after a serious correction, but managing to maintain a higher price for quite a while. The Apocalypse is now settling at 176, 175 million, which is more of a normal price range, and thus over the 6 months, although it's managed to stay above like 180 or around 180 for quite a while, it's now settling back down to a price pre 6 months, pre all of the changes. And so I do think that this means that the Tech 1 market is still looking decently stable, well supplied. People are using the ships and losing them. People are also making the ships and bringing them to the market, taking advantage of price spikes, but also smart enough to not flood the market when it looks like the prices are going down. So here, for instance, the descent from 182 to 174 has been halted, and now we're moving sideways a little bit. So I guess that supply here, it's still alive, but it's not that recent. You see, only 8 and 3 of them are less than a day old, but here 88, all of these are starting to become a bit older, and thus people are forced to actually buy those ships. Because people know not to crash the market completely in the Tech 1 market. Next up, the Caracal. Caracal is much more spiky. It is also a little bit of an exception in the sense that a lot of null-stick alliances field Caracal fleets, and so now the same thing happened here again. After breaking 12 million, I guess an alliance was willing to pony up all of that money, buy a lot of Caracals again. Supply is coming in though, very fast, plugging that gap once again. 10, 13, 27 here, 22, 40 even, the latest order, and they're all competing with each other for the sell price is close to 13 million, of course. Keep that in mind, it's right here at the top of this spike, but this is a clear showing of a very short-term reaction by the industrialists on this market. They know that this happens in the Caracal, they're ready with the ships, so they bring them to the market, trying to take advantage of these higher prices. This also means, of course, that it will correct quite sharply back down. But over the 6-month trend though, 11 to 12.5 million, Caracals are up a little bit, which is actually normal, I think, for a doctrine ship. Next up, the Dominics here, starting below 195, ending up just above 195. But this is clearly a good example of the Tech 1 market being alive and decently stable also. So stable income, of you know exactly what you're gonna have to pay for a ship like a Dominics, for instance. And there are some variations, but as you can see, they're not that big. You know, we're talking here maybe a 15 million price spike on something that costs 195 million. It's not that big, it's less than 10%, and that's the biggest variation, and it always tends to be short-lived once the price goes up because someone bought all of them, or there is an increase in demand for some reason. That gap gets plugged in very quickly, and so the average prices are maintained quite hard in the Tech 1 market. Next up, the Myrmidon here also knew a few pretty volatile spikes, but here the first 3-4 months you can clearly see that stability was around 51 to 52 million. Now we're back at 52 million. So after a bit of volatility, which is maybe also due to the mineral changes, that is possible, it looks like we're actually settling back down. Same with the minerals, so all of this does tend to mirror one another. It's definitely linked, of course. Here's the Stabber, also known quite a few decent spikes, but decent spikes, I mean, we're talking 10.5 to 11.5, 1 million to 1.5 million. It's not that big of a variation. You can clearly see the impact that the market has as well, with supply immediately plucking those gaps. Once you reach 12 million, people are making Stabbers, bringing them to the market, crashing them back down towards 10 million, and then sometimes we go back up if for some reason Stabbers are still in vogue, and then we crash back down again, and then we go back up. But the average of like 10.5, 11 million for a Stabber, you will always have been able to buy them at those prices. The Tornado is the one exception that is clearly settled above 72 million here, although it looks like it wants to go back down. We'll see if this if this move at the tail end here has some momentum. But if it doesn't, I would not be surprised that the Tornado has just become a bit more expensive to produce. So instead of 66 million, you're now paying 72 million for a Tornado. And then here we've got the Vexor chart, again very similar to like the Myrmidon and the Dominix. Some variation with I guess all of the mineral changes that come through in May here. But overall we're starting at 11.2 and we're ending at 11.2. So Tech One market still doing okay and still staying alive, exactly where it was like 6 months ago and a year ago. So whatever CCP does, I do think that they keep the Tech One market in mind. They want ships to stay available. They also don't want them to become dirt cheap either. But their industrial changes overall have all had like a negligible impact on the Tech One market that has stayed really stable despite the change that CCP has tended to do. So next up, Tech Two market, 16 minutes for that one. Let's see if we can spot some trades. Here we've got the Basilisk. Unfortunately, it's staying at 200 million here at the moment. My personal theory on this is that the new sovereignty system is going to bring back the need for a lot of logistics Tech 2 cruisers in different fleets, and so they could definitely settle at a higher price. I'm only hoping that there will also be volatility once people start losing fleets a bit more often. So this spike right here was pretty awesome to see. Let's hope that we can actually keep that going. But for now the Guardian is settling at 200 million, so I'd be careful with investing there. Here's the Guardian, that one is going back down a little bit, and so that is pretty good in my opinion. 126 now for the buyers, so you can actually buy them close to this price point here. If like me you expect that we could see volatility at a higher price point than before, it could be an okay time to buy, although I would maybe wait for a better opportunity. If buy orders go below 125 or something like that, I think personally I might jump in on some Guardians. Here's the Hound then. Finally the Hound knew its spike. It's good to see that the stealth bomber market is still alive as well. I actually sold my Hounds for a decent profit as well on this increase. I didn't notice, but I put up the sell orders knowing that, well, here I've got a very nice profit and at some point it's gonna happen. It did happen. I saw them get sold I think 2 days ago at like close to 19 million. Or something like that, and we're currently looking at 19.5 million for the sellers. So my sell orders have actually been picked up in this increase in price, and this is what tends to happen. This is what you need to find. I actually bought close to this low, I think definitely below 16 million, managed to sell for 19 million. Very nice increase in price right here, and it was about time for the Hound to show its move as well, so pretty damn awesome. Here's the Manticore. You can see that one actually had its spike, but now it's coming back down. And do we have buy orders below 21? Yes, this could be okay for like a medium-term investment. The volatility does seem to be back a little bit in these stealth bombers. Here is the Nemesis, a lovely double spike right here, now working its way back down. We're already talking 18.7 million for the buy orders, which is right around here on the chart, so it still has a way to go, some momentum. Of course, you're always better off buying at the lowest point. If you can buy below 18 million, that's absolutely stellar, and your potential profit is even higher. But now a nice little pullback from the Nemesis already. Next up, the Oneros here, that's becoming interesting as well. Excuse me. Getting very close to the 140 million mark, and look at this spike here up to 170. So 140 to 170, that's not a bad increase in price. We're already looking at buy orders below 140. I may personally try to pick a few up here below 140. That's not that bad. And here's the Purifier then, a bit more limited in scope, and already taking back off of 17.5 million. This is something we have to keep in mind. Of course, it is possible that Purifiers won't pull back all the way back to 16.5 million, which they did before, then going back up to 19.5. That's really good profit potentially. But if this keeps happening, if it keeps bouncing off of 17.5, you may need to make a move on the buy orders a little bit earlier than what we could do before. And then finally the Scimitar here, that one is going up quite substantially. That's very nice. If you manage to buy them below 120, you're already in sell orders of 143 1.8 million, very decent profit already right here. So scimitars, if you can still sell them, it's really the time to do so. I think at some point this is going to pull back. It's bound to happen. So yeah, the Tech 2 market, good to see that it's still alive, and I do tend to find variation and the potential volumes as well, I think, in stuff like cruisers, maybe destroyers, I haven't checked those, and then stealth bombers, so frigates, Tech 2 frigates up to cruisers. I think that's really a good market to make some trade money in if you can spot them, and for that I think EVTOC can actually help you, so let's hope that it does. Next up, the Tech 3 market, 20.5 minutes for that. Let's just go over them one by one here. Confessor is a destroyer, so that one is settling below 35 million. You can see by the numbers here, look at that, 563, 183, 13, 19, 58, 21, 36, all of this less than a day old. The oversupply, the too much production that's happening in the Tech 3 market at the moment is been going on for years actually, and it is depressing the market very hard, but it does mean that we have very affordable tactical destroyers. Here's the Hecate. Let's take a look at what that's settling. Look at that. 2 weeks, has it been out for 2 weeks or less than that, and we're already buying Hecates for 37 million, which is very close to I think where the price will settle. And look at that, 116, 67, 80, 62, 54, 23, all of this still coming in. So Hecate is already very affordable, and they do look great, honestly. Look at that. I have to buy at least a couple of them just to have them in the hangar and be able to fly them. Maybe in something like live events, I think that could be cool to have a small wing of Hecates scurrying around a bigger battlefield. I think that could be very cool, but they are already extremely affordable, and that in a record time. Here's the Jackdaw then. Look at that, 35.2. It's obviously gonna settle below 35 at some point. Big supply numbers, they're still coming in here as well. And then I'll just quickly grab this Vapel here as well, 33.5 million. Look at the supply, 788, 720. That's just not something that the market can absorb that quickly. So the Tech 3 production potential in the game is just too high for the usage of the ships at the moment, meaning that whenever something, a price spike will happen, supply gaps are going to fill even faster than in the Tech 1 market, and there's this constant depressing pressure on the price to stay low, just because people are making more than that's being lost at the moment. Then let's take a look at the cruisers. We'll go for the charts on this one. You can see whenever it spikes up to 170, supply comes in, breaking back down, but 140, something like that, is apparently the bottom, and this is where the market moves at the moment. So 150 for legions, working their way back up a little bit. Let's take a look at some supply here, 60 of them coming in here. That's gonna put some pressure on the price once again, so I don't think it's going to go that high at the moment. Next up, the Loki here, staying below 150, and let's see, supply here 37.41. So there is still too much supply, and this is clearly going to put a bit of pressure on the price once again. Then here we've got the Proteus, also below 150 million, and still 10, 19 and 20 of them coming in. There is obviously more pressure on the Proteus. And then the Tengu did go up a little bit, so that one jumped up, but you can already see that it's flattening. It's only a move from 150 to 155. Look at the response here, 43, 25, and that's like less than an hour old. So, and this one 25 less than an hour old, this one maybe 2 hours old, something like that. And those are just really big numbers compared to the volumes here. You trade maybe 100, 110 Tengus in a day, so the volumes would need to be higher, a lot higher, if the price would go up for Tech 3 market. There's just too much production. And then finally, for the extra products, that is 2415. Someone asked me to check the slave implants, and I will do that. Although I don't know enough about where they drop, I'm only going to check. Let's go for the high grade slave implants. The trend has been spotted, and that is very correct. 6-month trend, look at that, going from 105 million for high grade slave alpha down to 75 million. That's losing a quarter of its price over 6 months, so there is clearly a downtrend. Is this due to more supply, less demand, maybe like alts that have great use of slave implants that are no longer used, you know, stuff like Sino alts, capital alts. I think that is a possibility. Has something changed to supply? I don't really know. If that is the case, feel free to put that in the comments. But the trend here, look at that, 135 million to 95 million, also losing about a third of its price. That's quite significant, and a clear trend over these 6 months, and a little bit of a dive back down here as well. If I understand it correctly, they're actually going to make nullsec more valuable by increasing the number of anomalies and stuff that spawn in nullsec, or potentially at least. And so this, I think, could be a response to that, this dive down here from 85 to 75, and here again in the betas from 110 down to 90 million, just because there might be way more supply coming in if more sites can be run in nullsec over the same set period of time, because more of them will spawn. Here's the delta then, moving from 310 million down to 230 million. So this trend here for 6 months has been down quite a lot. And this one again losing, I'd say, about a quarter of its price. Then we've got the Epsilon one from 560 million, even 600 million. It's obviously been above that, and now 400 million, losing a quarter to a third of its price. That just happened, and again you can see that little dive down here early July. I think that could be an announcement to the making nullsec more valuable. That's one thing that you have to keep in mind, and this is a perfect example of that. Is that it's not that easy to make highsec more valuable, because all the players have risk versus reward in mind. If you make something much more attractive, safer, give it better loot, whatever, the player base is actually going to shift to that, and the market is going to adapt. Thus, let's say that you somehow make slave implant something that is much more available to players, safer to get and easier to grab, then they're just gonna flood these markets, and slaves are gonna reduce in value. Also, if there's actually a significant amount of activity that's going to be shifted towards the creation of these slave implants, it's gonna have an impact on the rest of the game, thus increasing the value of other activities like, let's say, mining or manufacturing or whatever. So keep this in mind. You know, it's not something like, oh, let's just double the yield in nullsec and then everyone is gonna move there. It's not that easy. The market is very much alive. Everything is player driven. Everything is interconnected, and increasing activity in one area is actually going to decrease activity in another area, and the market is going to balance all of this out with prices. And so saying that we'll just have an exodus all of a sudden, and that's just not how it's going to work. Over time, things tend to actually stabilize, and activities, you know, it all depends on risk, rewards, and it's not just a matter of increasing supply all of a sudden or making something safer. That doesn't really work in the EVE economy. Let's check out the gammas then, from 200 million, and here again that sharp dive down, currently at 130, so very similar. And then the omega starting at 1.15 billion, ending at 0.85 billion. So that's 300 million decrease in price over the course of 6 months. It's a clear trend here in these high-grade slave implants. Very good suggestion. If you know what's exactly behind this, feel free to post that in the comment. I don't know, but personally I do think it has a lot to do with the nullsec changes at the moment, and possibly the changes to like alts, capital ships, all of that could have added to the depression of the slave market because of a lower supply. But those are just my thoughts. I'm not entirely sure where exactly you get those and who uses and loses most of these. But there you go, guys. That's it for EVE Talk this week. Thank you very much for watching. I'll see you all next time.